PayPal has had a strong year in 2024, market cap rising to $91 billion, up from around $64 billion to start 2024. But in this video, what I'm going to do is look at an intrinsic valuation for PayPal stock. I'm going to collect together various financial data, forecasts for future free cash flow, and discount them back to today using a weighted average cost of capital to come up with the price per share that I think PayPal stock is worth today. I'm going to share with you precisely where I'm getting all the numbers and estimates so you can determine yourself if I'm using accurate numbers or if I'm using numbers that are too high or too low. It's a lot to cover. Let's get into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
All right, so one of the numbers I need is the market cap, which stands at $91 billion as of this recording. Average shares outstanding at 1.024 billion. The total long-term debt at 9.976 billion. And the cash and equivalents balance of 7.272 billion. I also need Wall Street estimates for PayPal's free cash flow in future years. Starting with 2024, the estimate is it finishes the year at 6.11 billion. 2025 grows to 6.87 billion. 2027 to 7.42 billion. I should say that was 2026. 2027 is 7.6 billion, and 2028 rising to 9.32 billion. I also need the beta for PayPal stock, which stands at 1.44 according to Yahoo Finance. All right, and now that we have all the numbers we need, we can jump into the discounted cash flow valuation model for PayPal stock. I know this can look intimidating for those of you that are not trained in finance, but don't worry, I'm going to go through each of these cells one at a time, describing where I got the numbers from and why you're seeing the numbers you're seeing. So let's get into it. Starting from this point here, the 6.11 billion in free cash flow, that was estimated by the analysts on Wall Street that are following PayPal stock, as well as the future years, all the way up to 2028, which I shared with you all the numbers I received. From this point forward, from the year 2029 to 2034, I have the company's free cash flow increasing at a rate of 8.6%, and that increase is half the rate of increase between 2024 and 2028. That's why I chose that rate, is because I forecast that the company's free cash flow rate of increase will decrease by roughly half over the next 5 years. And then from 2035 onward, I have the company's free cash flow estimated increasing at 5% each and every year. Now, this terminal value number you see here is a collection of all of the free cash flow the company expects to receive from the year 2035 to infinity. Because a corporation is theoretically able to survive forever, you can forecast those free cash flows to infinity and then discount them back to this point in time in 2034. The formula for that is taking the free cash flow 1 year ahead divided by the weighted average cost of capital minus the growth rate. I've talked about the growth rates. I'll talk about the weighted average cost of capital in just a little bit. So I forecasted all of those cash flows, and the numbers you see below are the discounted free cash flows, the present value of those cash flows. And the reason we do this is because money in the future is worth less to us than money today. So we have to discount those cash flows back to today so that we get a value that's roughly equal to what we feel is worth the time value of money. If I promised you $100 today versus $100 1 year from now, you would prefer the $100 today. But there is some number that I could give you that would make you prefer to take the $100 1 year from now, or that would make you indifferent. And that number is the discount rate. That's the number you'd be willing to accept. That's your time value of money. So now let's get to the weighted average cost of capital, which for PayPal I have at 12.31%. The weighted average cost of capital is what it sounds like. It takes an average of the different sources of capital a company receives. To simplify things, I'm going to just assume the company has debt and equity. There's something in between that's called preferred stock, but I tend to ignore that because it's usually such a small percentage and it just complicates things more than it adds value from information. So I just keep financing sources at either debt or equity. And so for PayPal, I give them a cost of debt of 7.5%. And I arrive at that by adding roughly 300 basis points to the risk-free rate, which is the government bond 10-year yield. And the cost of equity, I use the capital asset pricing model, which takes the risk-free rate and adds to that total the company's beta times the market risk premium. The market risk premium is a number that investors want in order to go from taking a relatively risk-free asset in a government bond and moving their money to stocks, which are riskier, right? So all else being equal, investors would prefer the lower risk asset in the government bond. But if you pay investors enough of a premium, they'll switch their money into stocks. And that premium I have at 6%. This number is estimated between 4 and 6%. I chose 6% in this case here. So the company has 9.976 billion in debt and 90 billion market cap. So I'm going to assume a capital structure that has them with 10% debt and 90% equity. So when I combine those sources of capital and I apply the costs of each source, I arrive at a weighted average cost of capital of 12.31%. That's the percent I'm using to discount these cash flows all the way back to this point in time today. And so when I utilize that calculation, I get a value of PayPal's operations at $123 billion. This is the present value of all the free cash flow that PayPal is estimated to earn between now and infinity. Okay, so that's the present value of all those free cash flows you can expect from the company. To that total, we need to add how much cash it has and subtract how much debt, and we arrive at the value of equity of 126 billion. But we want to know the price per share. So we got to divide the value of equity by the number of shares outstanding, which was $1 billion. I shared with you where I got that from. And that gives me a intrinsic value per share for PayPal stock at $123 per share. As of this recording, PayPal stock was trading at $90 per share. So according to my calculation, PayPal stock is undervalued by a little more than 30%, maybe closer to 35%. But this is according to several estimates and assumptions, so please do your own due diligence before making a decision on PayPal stock. This should be for entertainment and informational purposes only. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.